today's live technical analysis. So we're going to be starting off with the British pound, as you can see here. So we're looking at the pound against the US dollar, essentially cable. So earlier on today, the UK CPI rates came in lower than expected. So the lower than expected CPI rates might be hinting that inflationary pressures on the UK economy are easing. Therefore, there might be less pressure on the bank to hike during their next meeting. It is worth noting that GBP OIS on Monday had approximately an 87% probability for the bank to hike by 25 basis points in their next meeting with this week, whereas following today's release of the UK CPI rates, that OIS is now around 54%. So we're seeing predominant change from the majority of market participants who are expecting the bank to hike to potentially remaining on hold. Now, personally, we believe that this might be an overreaction as inflation is still far too high in the UK economy. Therefore, even though for a month the UK CPI rates came in lower than expected, it would not necessarily mean a shift in policy. We anticipate that the bank will continue as planned and potentially hike by 25 basis points. But in my own opinion, if they do hike by 25 basis points, there might be more of a dovish hike, so more dovish sentiment in the post-hike conference or in the minutes, etc. But as you can see on the expectation that the bank may be remaining on pause, we're seeing that the British pound is moving in a downwards fashion. So I've enlarged our RSI tab around here. You can see that the RSI is around the 35 level. So near 30, implying a strong bearish market sentiment within the market. It is continuing to validate our downwards moving trend line. As you can see, we have two. Note that the narrowing of the Bollinger Bands implies low market volatility. So at 30, with low Bollinger Bands, narrow Bollinger Bands, implies a bearish market sentiment. If it fails to break below S1, however, I would anticipate that the pair will move in a sideways fashion, so remaining between S1 and R1. If it breaks above our downwards moving trend line, for a bullish outlook, I would require the pair to break above R1 at the 1.2535 level. We're keeping our support and resistance levels the same. Why? They're continuing to be validated on the daily. So as you can see, it's broken below. It had tested support, turned resistance, made a clear break below, came back to retest the new resistance level, which was support, and is now moving slightly lower. So the narrowing of the Bollinger Bands implies low market volatility, yet the RSI and our downwards moving trend line are hinting towards a bearish market sentiment. So we're maintaining a bearish outlook for the pair at this point in time. And given that we're anticipating a hike, we might see the pair moving in an upwards fashion. If, however, the bank remains on pause, we might see the pair further weakening, breaking below S1, moving towards S2. Dollar against the Japanese yen, just going to be removing our duplicate labels. As a matter of fact, we can simply clear everything and just begin from the beginning. Let's just place it all together. So we'll just keep the labels so that we can use them later. Right. Let's remove this. All right. So we have a clear chart. Let's just remove this upwards moving trend line as well. There we go. So what we're seeing now is the dollar against the Japanese yen on a 4-hour chart. On the daily, we can see that it's making new swing lows and swing highs. So from that, it's a bullish outlook. From the daily time frame, we're seeing that it's maintaining at the mid-range of the Bollinger Bands as a small retracement level before moving higher. You can see that on one occasion and then on another occasion. Came to the top, came back down, and is now moving higher. So based on the daily, we're maintaining bullish outlook. It's close to the 70 RSI figure as well. On the 4-hour chart, we're going to be drawing an upwards moving trend line. As you can see, it was broken this point, yet it's failed to break below. Could be formation of another upwards moving trend line since it's respecting the mid-range of the Bollinger Bands. And let's just zoom in. You can see small break, might have moved sideways, but has validated the mid-range. RSI is still near the 70 figure. It's currently at 63.7, as you can see here. So it's close to 70, implying strong bullish market sentiment. So based on what we're seeing, there could be a small retracement to our upwards moving trend line, which is coinciding with the mid-range of the Bollinger Bands before moving higher. We could also see if there is an upwards moving channel being formed. As you can see, it appears that that is the case. Let's just draw this on black. There we go. Let's just take the open of this bearish candle. Let's just bring this downwards moving trend line so it's a bit easier. So we could either place an upwards moving trend line or an upwards moving channel, or we could even do both. I've simply removed this to make this a bit more easier for you at home to see. So as you can see, it's moving in an upwards fashion. I'm maintaining a bullish outlook for the pair. On what grounds? One, we have the Fed's interest rate decision, which is due out today. The majority of market participants are anticipating that the bank will be remaining on pause. So if the bank remains on pause, we might see the dollar weakening. So you might be asking, why am I maintaining a bullish outlook for the pair if the bank's going to be remaining on pause, which could weaken the greenback? I think that even if they do remain on pause, it is likely that Fetcher Powell in the conference, well, with the press afterwards, so in the conference where there is a Q&A, etc., I think it might sound slightly hawkish in order to offset perhaps the pause. But personally, I think that there is still a chance that the Federal Reserve will hike. They may hike by 25. And why? I think they still have a long way to go. I think there is a greater risk based on what we've been seeing from Fed policymakers that they'd rather overhike than allow inflationary pressures to come back at a later time. I still think that even if it is a pause, there might be some hawkish sentiment in the minutes or in the conference after the decision has been made. So, in my opinion, this is why I'm maintaining a bullish outlook for this pair. So, let's just chart our support and resistance levels. This is my support level at S1. Why am I not placing it here? Personally, I think this has more validity as a support level. Note how many bullish and bearish candles have tried, tested, opened, or closed at this level, and then broke above, made a clear break, and moved higher. So this is a more valid support level, in my own opinion. 147.40, and this would be my support level at S1. Feel free to chart at home as well, as we're doing this live. For S2, we need roughly, and that's a personal preference, this point, for example, here where there is a swing low, for me is still very, very close to S1. I'd rather give it some space to breathe. Broke above, moved higher, came back, validated, and is also the beginning of our upwards moving channel. Therefore, a valid support level in my own opinion. So 146.20. This would be my S2. We also note the high number of ECB policymakers who are due to speak out today. And just before finishing off with our support levels, we'll be going into the common currency in just a bit. For now, as you can see, the start of our upwards moving trend line as well, which has been broken, yes, but appears to have come back up to be validated. But since we have an upwards moving channel, I maintain the channel over the trend line. But this a valid support level for S3. 144.70. I'd like it to coincide with the closing of the bearish candle and the opening of the bullish candle. 144.72. So these are our support levels, and we're now going to be looking for our resistance levels. So we previously had the 147.80, which has been broken as it is at 148. And as we go back, so we have S1, S2, and S3. It's around here. This would be my R1, 148.73 as resistance level 1. R1, and then for R2, the distance between S1 and S2 is 119 pips. So between R1 and then R3. Roughly the same distance between each support level and resistance level. Also validated. If you have any questions as to why they've been placed at those points, feel free to ask. So we're placing R2 at the 149.90. Let's just round this up. Go, and then 151.45. Surprisingly, very close. Well, not surprisingly, but it is close to our previous R3 of 151.50. And here we go. We have our 1 or 2 or 3, and we also have our support levels. So we're maintaining a bullish outlook for the pair on a technical basis and potentially on a fundamental basis, which is based on my opinion. However, if I am mistaken and then the Fed does remain on pause and the remarks are dovish in nature, I would not be surprised if it moves below S1 and moves towards S2. If it breaks below S1, we'll be maintaining a bearish outlook for the pair. So the euro against the US dollar, narrowing of the Bollinger Bands. If I'm not mistaken, yesterday we said that it would be moving in a sideways fashion. It appears to be that appears to be the case. Still respecting the mid-range of the Bollinger Bands, but is remaining above S1 at the 1.067 level. So I'm maintaining a neutral outlook for the pair. And we have a number of ECB policymakers who are due to speak today. I would be personally highlighting ECB's Schnabel, who is due to speak later on today. That, I believe, would have more of an impact in the market. Based on those comments, if they're hawkish in nature, which I personally predict that they might be, we might see the pair appreciating, so moving higher towards R1. Yet, if what I said before with the Fed does occur, so an unexpected hike, I would expect the pair to break below S1, if not breaking S2 almost immediately and moving towards S3. So a bearish outlook if the Fed hikes. If the Fed does not hike, even if the remarks are hawkish in nature, for the euro in particular, I don't think that will have that much of an impact as it could be countered by comments made by ECB policymakers today. So for now, at least, we're maintaining a neutral outlook. On a technical basis, it's above S1 still. RSI near 50, implying neutral market sentiment. Yet from a more macro perspective, it's still validating the downwards moving trend line. And it's still finding it a bit hard to move higher. So there might be some bearish tendencies remaining within the market. We're going against, what are we going to be looking at for now? You can look at gold. Gold broke below our upwards moving channel. I'm maintaining a neutral outlook for the precious metal. Note how it's stagnating and slowly moving towards the 50 level. RSI is currently at 56. So applying slightly neutral market sentiment. For a bearish outlook, it would need to break below S1 at the $1,920 mark and move towards S2. For a bullish outlook, it would need to break above the $135 mark, 1,935, sorry. But it appears that the momentum for the bulls appears to be waning, and as such, I would be maintaining a neutral outlook for the precious metal. Now we're going to be looking at oil. So the API weekly crude oil inventories actually showed less being taken out. So what does that mean? It could also mean that the US strategic petroleum reserves are at 30-year lows at this point in time. They're pretty low. They're going to have to be refilled at some point. However, from a more political perspective, you have the US elections which are due to take place. So we're starting off with the states and then the primaries, etc., etc., etc. And when you have elections, personally, I don't think you can have oil prices too high. Energy can't be too high because if energy prices are high, then potential voters may be discouraged from voting for a particular party or the incumbent president. Therefore, from a government's perspective, it makes sense for them to push prices lower. But if your SPR is already depleted, then how much lower can you push them before you have to start refilling? So perhaps for the next month or so, we might see the price of oil moving higher before the current government starts releasing oil into the market and to push prices lower just before the primaries. But from a technical basis, it's broken below the 50 threshold, implying a switch from a bullish to a bearish market sentiment, broken below the mid-range, also below our upwards moving trend line. So I'm actually switching to a bearish outlook for the short run for the price of oil. 90.40. So this is support now to resistance. So S2 at the 87.50 is now S1. S2 becomes the 84.30. And now we're going to be looking for S3. S3, I'm taking this previous high, 81.30. Put this in green. And there we have it, 81.30 for S3. We're maintaining a bearish outlook for the commodity for the reasons stated before. For our bearish outlook to continue, it'd have to break below S1 and move towards S2. If it does decide to reverse trajectory and move higher, it needs to break below support and resistance. But for a neutral outlook, remaining confined between S1 and R1. Can be looking at as well the dollar against the CAD. We note that the monetary policy deliberations, opinions for the Bank of Canada are due to be released later on today. And let's just zoom in. Okay, broke slightly below. Market correction higher. Near the 50 might be implying a neutral market sentiment if it remains between S1 and R1. I'm going to be bringing S1 lower. As you can see, it's found support. It could be testing support, but it's far too close. So simply put, 1.34. This would be S1. I'm taking once again the opening and the closing of bullish and bearish candles. Some of you might prefer using the wicks, which is fine, but personally, I think where the candle opens and closes is more important for me because it might have reached, it might have taken out some stops, gained some liquidity, and then moved higher. So the wicks are interesting to validate where I think the support level is, but from my own perspective, I'd rather take the opening and the closing as I think there's more support or resistance at those levels. For a neutral outlook, it would need to remain between S1 and R1. Let's just make this. Let's just tidy up our chart. .35, 1.34. It's actually finding quite resistance at the closing of this bullish candle. So this could be a temporary, could have been a temporary support level. On the daily, moving in a downwards fashion, finding some resistance. On the weekly, moving down. On the hourly chart, narrowing low market volatility, breaking below is applying a switch to a bearish market sentiment. 4 hour. So from a more overall view, I'd be expecting the pair to move lower. You might be seeing some support for the dollar due to the fact that the prices of oil are moving slightly lower for the day, and given that Canada's status as a major oil producing nation could mean it might be weakening slightly, but from a more general perspective, moving lower. And of course, there are there are deliberations for their September meeting are due today. If there is an indication that the bank might be willing to hike in the future, you might see it breaking below S1, if not moving towards S2 as well. Yeah, but it is more dovish in nature, breaking above R1 and R2. We're going to be looking at the dollar against the Turkish lira today. And bringing this right where this strong bearish kind of no mistake. This is when they actually hiked, took markets by surprise. The dollar against the Turkish lira is extremely volatile. So, trend line, you could even say that this is a channel. Let's just remove this. Bullish outlook, still about 50 near 70, but this is the Turkish lira we're talking about. So it could easily switch within fractions of a second. What is interesting is that with the UN General Assembly actually taking place, Turkey apparently from SIMSEC, using SIMSEC, they're looking for investors from the US. And perhaps some of the preconditions for investment to move into Turkey would be a full return to orthodox economic policy. So we might be seeing that the bank may hike even further than what is expected, which could provide support for the Turkish lira. In an attempt to appear that the central bank is now in control and is independent from the government, I think it is required to show to foreign investors and to the international markets that the current bank has power and can act independently from the government's ambitions, at least towards the investors. Therefore, I do think that the Turkish government, the Turkish central bank will be hiking. Therefore, I'm maintaining a bearish outlook for the pair. But if it does not and then underwhelms the market, I would not be surprised if it simply jumps up and moves towards R2 almost immediately. We're going to be looking at some stocks as well. So what we're looking at yesterday, Banco Santander. Banco Santander, as on the daily, should be up. Yes, it is. So as we said yesterday, the bank announced new changes, so cutting costs, increasing efficiency, bringing many units under one department. So as you can see, it's fashion. I would be maintaining a bullish outlook for the stock price. Yesterday, on the daily, it moved higher. Came back lower, came back to S2, failed to break below S2. 3550 is R1. Breaking above the 50 RSI figure, implying a switch from bearish to bullish market sentiment. Broke above the mid-range of the Bollinger Bands, so I'm maintaining a bullish outlook for the bank's stock price. So if this is our new R1, R2, R3, then that would mean I'd need a new support level somewhere around here. This would be my S1, 31.33.20. So now 3.18 it is. Bullish outlook based on what they announced yesterday. If you want, you can Google Banco Santander new measures. Well, not new measures, but simply the reorganization of the company. Sociedad General, when we had placed our support and resistance levels, it had immediately broken below. This, for me, is a small retracement as there is a volume gap, volume liquidity gap, as you want to call it, which might need to be filled. But I'm still maintaining an overall bearish outlook for the company due to the fact that they're cutting out profit expectations. Apple. So, as you most likely know, Apple announced a new iPhone. If the pre-orders are strong, so there's a lot of pre-orders in the market, well, for the company, that might boost the company's stock price. Let's just place our support level. I'm trying to see if it does not. This would be a nice support level where the bearish candle opened and then you see the bullish candle opened. This point exactly. So from here, had it not broken above, would have moved further in downward fashion, but it broke above, supported, and moved higher. Yet it's not exactly touching. So this would be in my opinion, a more safer bet as support. 173.90 for S1. This would be R2, R1, potential R2, and then potential R3. So I have S1, looking for S2, then for S3. $189.50. Something that has not been heavily reported, perhaps, is the fact that Foxconn is increasing their output in their Chinese factories, switching away from China, as appears to be the trend recently with many companies. Goes to say what we were saying yesterday about the underlying issues in the Chinese economy. Then 180.11, 0.10. What could we use? It's broken above the mid-range of the Bollinger Band, so we could say we're maintaining a bullish outlook for Apple. Near 50 on the 1 hour, it's broken above, still above near 70, implying a bullish market sentiment. On the daily, it was moving up, so we're maintaining a bullish outlook for the company's stock price. S1, S1, S2, S3, R1, R2, and R3. And yep, I think that does it for the day. Thank you, and have a nice day.
and welcome to another of our great educational videos. In our previous video, we looked at margin level. Today, we'll be looking at margin call level. Margin call level is when the margin level has reached a specific level or threshold. When this threshold is reached, there is the danger of having some or all of your position liquidated or closed. For example, some forex brokers have a margin call level of 100%. If the margin level in your account falls to 100% or lower, a margin call will occur. A margin call is a notification that alerts you that your margin level has fallen below the required minimum level, the margin call level. Therefore, you need to deposit more money in your trading account or close losing position to free up margin. When the market is moving against your open position and the margin level falls to the margin call percentage, you will receive a margin call warning on your device. This is basically a warning that the stop out level is approaching. In our next video, we will look at stop out level. Stay tuned.
For today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Adverse Fortune Group, who are finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number 2, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay, lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features, so it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience since it has all of the features required all in one app. Okay. I briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is MetaCode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So we mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, this feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com, because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it will tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects, such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions, such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into back testing. Okay, so what exactly is backtesting? So it's basically the use of historical data to test your strategy. Sorry about this, my throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for: net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know. You would either have to repeat your testing, or change a variable, which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading. A lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your backtesting of your trading strategy, then you have a certain number of assumptions that you make off of those results, and not based off of whether you think that it's right or wrong. Okay, Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. One practical trick for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay. So first things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis. So purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for retracement, not retracement, sorry, projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm going to get rid of that MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart, so feel free to let me know if you have any requests. If not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for our first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm going to pull out RSI. Okay, RSI isn't really telling us much. So I'm going to pull up stochastic. Okay. So for our stochastic, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. Oh, it's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel, because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes. So before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.